Now today we have this lesson, how to invest in Facebook, the second half of 2015. This is not going to include any earnings call. I'm going to refer to the guidance that we have been using here for months, and in fact also in a certain sense what I already referred to in previous videos in Facebook. Having said this, our most recent call in Facebook, and this was made on earnings and after earnings, ahead and after earnings, and you have the live trade calls, the explanation of it on the website, on the blog, stockmarketlive.tv, where we proven that our strategy during the course of the past years in Facebook, it has been proven to be the most accurate, the most credible, and the most profitable form to invest and to trade Facebook stock. And we are very proud of it because we can prove, unlike others who have been claiming and making the wrong calls in Facebook and therefore claiming a performance that they cannot prove. And I repeat that this is rather important because today you have stock analysts in Wall Street with targets in Facebook $110 and higher, while when I called this a lifetime investment opportunity in Facebook a few years ago, when shares they were trading at $18 to $20, no one at that point believed that Facebook would be in fact a lifetime investment opportunity, as I addressed it to be precisely the case. So I'm very proud because Facebook in the end proved to be that lifetime investment opportunity, unlike for example the case of Twitter or other social media stocks, other example you had in Yelp and others. So Facebook proved to be the best social media stock to invest in, and this is something that I believed in and something that I transmitted to subscribers on a long-term basis. And so what I'm going to refer to here are instructions for the rest of 2015, provided the market conditions they remain as they are, and also excluding some potential moves by the Federal Reserve in the US, all right? Because those things to happen could change the landscape for Facebook for the rest of 2015 or beyond, okay? So I'm going to refer to this chart in Facebook. This is the chart that you have, raw chart, and I'm going to make here some comments which I consider very important, and also by you attending this lesson, you are going not only to know how we have been trading Facebook, but also important things that most people, they completely neglect, and they are of critical importance. And obviously I'm referring to investing in Facebook according to the signals that you have in power shares, the Qs. So during the course of 2015, this stock, basically my upside, it remains the same, in the sense that I already disclosed it to be $85 to $89 at most, in the sense that I don't see a reason for Facebook to be trading at $100 or $110 or $120 unless there is a clear breakout in the Qs to the upside, in the sense that the Qs they have to move to 115 for you probably to have Facebook at $90, $95 or so on, okay? So Facebook, it remains a long-term uptrend. The fact that my colleague in the collateral type trading sold short the stock at $84, $85 when I took profits on the long side, it does not mean, it didn't mean that we are trading or reversing the trend in Facebook or investing in Facebook believing that the shares they are going to crash. This has not been the objective or the aim of the selling short opportunity that existed after the company reported earnings. The fact is that I already referred to the upside to be 85, 89, and near that region we take profits on Facebook, and if you wanted to sell short, you sell short on always on strength and not ever on weakness or after the shares they sell off. Having said this, we already announced to existing subscribers that our downside in Facebook or a new opportunity could exist around $77. So today, what we have in Facebook, it is a long position. We closed, and my colleague closed the short position at $77.30, and he reversed it to the long side, all right? Because there is a clear long-term uptrend. He's not playing Facebook for any crash, or at least that was not the aim. And what I'm going to do here, because while the upside in Facebook is 85 to 89, our downside is 77 to 73, okay? So I'm going to click here on annotate. And while this blue line that I'm going to show you here maintains, I believe that you should have a position in Facebook. So this blue line represents, in fact, or constitutes regions where we have been buying or covering short position on Facebook. This was the case in 2014, all right, in October, when the shares they traded down to $72 and a half. We recommended then a long position in Facebook. Several months later, you see here when I recommended to take profits in Facebook. Okay, this was coincident in this region. There is a live video on demand lesson precisely here, as well as there is other one call here on earnings. All right, so Facebook sold off all the way down to the blue line, and we covered the short and we went long the stock. Okay, so this is what you have. On the midterm basis, what you also have is that this stock, and we are going now to refer to this line. What you have here on a midterm basis, it is this line, all right? This line, this red line, is more or less parallel to the blue line. So this tells you that near the red line, you don't buy the stock. We don't buy any single share after the stock bounces. This is the same reason that we have, for example, in Apple, and we only buy on weakness, or we cover short positions on weakness. We never buy one single share after the stock bounces or at intermediate prices. And if you wish to know the concept of intermediate prices, you have it on the trading course, okay? Because when you assume, for example, let's say that today you assume a position in Facebook at $81 and a half. It is not the same as buying the stock at 77 and 30 cents or near the blue line. It's completely different. So your risk increases, my friends, but this I already addressed before, and I keep repeating the same. So it is up to you to decide what you want to do. We do not like to trade or to open or to assume positions at intermediate prices. Or you wait for the stock to move all the way up to the red line, and this for video on demand subscribers, or you wait for the stock to pull back all the way down to the blue line or below, to the region. If you are bullish, Facebook 85 to 89. If you are bearish, Facebook 77 to 73. But I repeat that the instructions, they were very clear in the sense that the lower it goes, the better it is, because your risk decreases. So if you bought, for example, Facebook at $85 on Wall Street upgrades, your risk increased. If you bought Facebook on Wall Street upgrades at 77 and 30 cents, your risk decreased. Why? Because they have to defend the stock. We don't have to do anything. They have to defend the stock. Those that they bought the stock at 85, not us. You understand the perspective, the reasoning? It's very simple. In stocks like Apple and some others, this reasoning, it is the same, or the strategy. So what this stock is doing for quite a while, for several months, it has been trading sideways. This does not imply that there is a reverse of a trend in place. The fact that the stock is moving sideways with a positive slope, not a positive slope like 45 degrees or 60 degrees, but 15 degrees or so. You might ask whether this is a concern. Right now it is not a concern because market conditions, they are very favorable. But the fact is that the only way to make a profit on long side in Facebook is to buy the stock on weakness. It's not to chase the momentum. And the same is valid for Apple, for example. Or it has been the case. The comments that I made about Apple also apply here, in the sense that although this stock is moving sideways, the fact that it has been moving sideways, it is very good, because not only Facebook, it is a very reliable stock. For example, imagine that you had a long position in Facebook, and the same as it happened in Twitter will happen to you. You were doomed, my friends. You understand? So the fact that stock has been moving sideways tells you what? That no matter whether you had a short position in Facebook or a long position in Facebook, at some point, the market gave you the opportunity to close the position with a profit. And this repeats in time. So I repeat, no matter whether you sold short the stock or you bought the stock, the market gave you the opportunity to close the position with a profit. And that is very good because it is definition of less risk or low risk. Again, unlike the case of Twitter, where if you didn't close the position, for example at $50 or plus, today, my friends, you are navigating in losses, or you are hoping, if you bought Twitter at $50, that the stock one day will be trading at 55 or 60 for you to have a profit, all right? It's completely different compared to Facebook, or at least it has been completely different, to use the correct variable tense. So, it is also normal, I would say, that after the stock gained so much in the past years, that, my friends, you don't have to expect the stock to be trading at $100, $150 or $200, my friend. This is a 200 billion plus market cap, okay? So the things, like in Apple, you have to adjust or to level out your expectations. So this is what I have to say for the rest of 2015, without including any Federal Reserve potential moves or earnings calls, all right? And look at also what is happening in terms of the power shares QQQs.